Thanks for joining us on Parlance. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get you the headlines. Indian markets extend declines led by losses in banking and pharma shares, all sectors barring IT trade in the red.
SL Group promoters managed to buy some time from lenders holding pledged shares.
Jet Airways will seek shareholder approval to convert loans into shares or convertible instruments in its meeting on the 21st of February.
The government may announce plans to borrow 6.4 lakh crore for the next financial year during the budget on Friday, says a Bloomberg News survey.
All right, let's get to all of that in a bit, but let's start with the markets. Yatin is here with us.
Afternoon, Iran. If you look at the markets, almost 1% down on the key indices. If you look at the Nifty 50 advance decline ratio, is almost 10 stocks declining to 10 stocks gaining to 40 declining, and clearly the markets are under big pressure. However, stocks like Z, L&T, Wipro, TCS, these are the stocks which are gaining in trade. Of course, Z, after the intraday fall on Friday of over 35%, has managed to see some recovery, 10% up for that one. However, if you look at the NBFC space, that is under extreme pressure. Stocks like Piramal Enterprises, Diwan Housing, Indiabull Housing, all of these stocks are down in double digits, and especially Piramal Enterprises, which is down almost 7-8% last time I checked, ahead of the results. Apart from that, on the losing side, we have Adani Ports, which is almost collapsed 8% in trade, was down as high as 25% in intraday. ICICI Bank, ahead of the earnings, is down 5%, and remember that stock is almost 10-12% off the recent highs that it made. Yes Bank and JSW Steel are other stocks which are on the declining side. So clearly the markets are under pressure, led by the fall in some of these financials and NBFC stocks.
Thank you for that. But the focus today is on the Z Group. The SL Group promoters have convinced most of its lenders to give the company some more time to repay its loans. The conglomerate has also kept pledged shareholders from invoking the pledge. Remember, this comes after one of the lenders sold about 0.6% of pledged shares on Friday, leading to a sharp sell-off in the stock. So how do promoters plan to shore up capital and repay lenders now? Sajid is here with some of those answers. Sajid.
That's right. The plan hasn't changed from what they announced in November, but the only thing is that there is little urgency in executing that plan now. Now that they are on a thin wicket, which is because of the debt they have. If you look at the total debt which is there, that's nearly 13,500 crores. Of that, 7,500 crores is held by mutual funds. These are all secured debt, but most of it is against loan against shares, and while the normal covenants for them is nearly 1.5 to 2 times, the loan covenant has now come down to 1.1 to 1.2 for them, and that led to some amount of shares being sold on Friday, 0.6%. That's what the management revealed in the morning con call. We don't know yet who the lenders are who sold off that shares on Friday, but the fact is that over the weekend the management met all the lenders, which includes mutual funds, banks and NBFCs, and they have come to an informal agreement that no further sale will happen, even if the amount falls below 1 time, and they've given a time till April for the management to sell its assets, which is especially in infra and infra space, where they have a lot of assets and they have put all that on the block, and get a strategic investor for Z, where the promoters have already indicated 50% sale of the promoter stake in the company, so, and on Z Entertainment, the flagship company, and that's what will bring in the money, and the first right of receiving money would be the secured lenders, which includes mutual funds, NBFCs and banks.
Okay, let's talk about mutual funds as well. Walk us through the mutual funds that have maximum exposure and what's at stake here.
So, as I said, the total breakup of the debt, more than half of it is with mutual funds in terms of NCDs. If you look at the breakup of those NCDs, you have Aditya Birla, which has the highest exposure of nearly 2,600 or 700 crores, followed by HDFC Mutual Fund, which is over nearly 1,200 crores. Then comes Franklin at 1,000 crores, ICICI Prudential at 800, and Baroda Mutual Fund at 507. So there is a bunch of 6 to 7 mutual funds which have nearly 7,600 crores of exposure which is there. They are sitting on secured assets. Some of the assets are basically annuity assets of the SR group which are generating revenues, and those have been securitized. That's what we understand from the mutual fund industry. But a large chunk is loan against shares. Now that has been volatile in the last few days, and so the coverage ratio for the loans have come down below 1.5 in many cases. Even if you account for today's sharp increase or a pullback which has happened in Zee Entertainment or Dish for that matter, it will be nearly 1.3 times. It's still below the 1.5. But but as of now, the mutual fund have agreed to do a standstill and not sell off the shares in case the stock falls further.
All right, Sajid, thanks so much for that. Read more details on that story on BloombergQuint.com. Let's move on to Jet Airways. The company has called for an extraordinary general meeting of its shareholders seeking permission to convert debt into equity. Somit Sarkar gives us a sense of what this conversion would mean in terms of dilution for the existing investors. Somit.
So Jet will be meeting its shareholders on Feb 21st, and it's seeking their approval to convert part of its debt into equity shares or other convertible instruments. Now, for this purpose, the company is also seeking shareholders' approval to increase its limit of authorized share capital from 200 crore rupees to close to 2,200 crore rupees. Now, the company proposes to expand its equity base by nearly 4 times, while it is looking to expand its preference shares base by nearly 76 times. Now, the possible reason why the company would be looking to expand its preference shares base more when compared to equity shares could be the 49% regulation cap on foreign holdings in the Indian Airlines. Now, Etihad currently owns 24% stake in Jet Airways, while separately, if you see, Jet Airways owns close to 5,000 crore rupees to foreign banks. Now, that's the reason the issuance of preference shares could help Jet Airways to convert this debt into other instruments and also to infuse funds into company. Now, according to an earlier ICRA note, the company owes close to 10,900 crore rupees to banks, and a conversion of around 50 to 70% of this debt into equity would lead into an equity dilution of close to 65.6% to close to 72.8% according to according to Bloomberg Quint calculation. So that's a bigger dilution that we'll see for Jet Airways if they convert this debt into equity at Friday's closing price.
Somit, thank you for that. Well, we're through the first leg of earnings season. 16 out of the Nifty 50 companies have reported numbers. Corporate India has largely lived up to expectations, at least so far, until Friday when we saw the first signs of stress. Darshan is standing by with a scorecard of earnings so far.
Yeah, so Harsha, Friday was when Maruti came out with numbers, and that was a big shocker that came in. Now, the earnings season is fine so far. If you're looking at the numbers that have come out of the 16, 10 are in line, 5 are strong, and 1 weak, and that is Maruti. And the trend certainly remains similar to what we saw last year also. Now, if you're taking a look at what the past trends were, or which are then, firstly, we also come out with the numbers that came out. Maruti was a weak one. Kotak, Zee, Bharti Infratel, L&T, and Asian Paints were strong. Rest, the others, a lot of private sector banks, a lot of FMCG companies, and a lot of IT companies came out with numbers which were in line. Reliance also joins them. Now, if you take a look at the trend, pretty similar to what we saw in the same quarter last year. So if you see, there were almost 1 week earning, and it's 1 week earning here, and the number of strong earnings have gone down. But of late, we've seen that the majority of the companies that are coming out with numbers are pretty much in line with what we had anticipated. So it's not been the best of earnings season, but rather than the fundamentals, I think stocks are reacting negatively to the commentary that comes in. So expect that the fourth quarter probably may see a little bit of weakness. Now, I estimate at the start of the earnings season, that was the 1st of October, it was 135. It moved up to 137 when the second quarter earnings did end. At the start of the third quarter at the start of the third quarter results, when IndusInd came out, it fell to 119, and Jan 28th is where we are currently. It's at 119. So the estimates have actually come down from the start to where it was.
What about some of the bigger companies, the heavyweights?
Yeah, so let's start with Maruti. Margins fall to a 5-year low. Higher discount, commodity, staff cost, all of them weigh in on this. The profit is at the lowest since the fourth quarter 2016. Management commentary was subdued. The only positive was the Gujarat plant localization, which they believe that will aid margins, but that will come in the next 12 months. So nothing much fancy to talk about Maruti. Overall, a weak set of numbers. Ultratech was in line with the estimates, but the counter is down almost 15% post the earnings because of weak weak management commentary. They said that realization and utilization continue to remain weak, and that has weighed in on the entire cement sector. So that's Ultratech. The third one is L&T. Strong results, guidance was maintained, expect sales at the higher end of 12 to 15% margin. Commentary strong. The only sore point was the infra margins, which came in much weaker than that what was, but over the stock reacting positively. The other set of earnings that came out was the FMCG company. I think volume growth was strong across the board. Margin disappointment was clearly seen, and the commentary was decent. So overall, inline set of numbers that came in. Asian Paints was very strong, strongest volume growth in 8 years, despite margin disappointing. So that's the trend. Commodity pressure has certainly been seen on the margins of these companies. Again, Reliance, strong performance across the verticals. First time that the net profit was about the 10,000 crore mark. Petchems, the oil business showed a little bit of weakness, but overall retail, Jio, all of them did well. The other pack that we want to talk about is the banking pack. Yes Bank in line, IndusInd Bank. Yes surged on the new CEO appointment, not the numbers. And IndusInd Bank we fell in because of the IL&FS. They said they'll keep it as a standard asset and not an NPA, and that caused the fall. The other banks that came out were in line with estimates, nothing fancy to talk about. IT firms also, except for an Infosys, which raised the guidance. Results were in line, margins were weak across, and guidance was maintained. That's the IT companies. Couple of few other earnings. Obviously results were higher than the best analyst estimate also came out, but the counter is falling on results, on news apart from the results. Commentary was also decent from Z. And finally, Bharti Infratel was a strong set of numbers. Exit charges, higher rentals and cost control aided the company, and the gross addition was the highest in the past 5 quarters. Strong numbers, and the counter continues to gain.
Thanks so much for that. Let's move on. Automakers may be restless to gather speed, but the road doesn't seem to be opening up just yet. A Bloomberg Quint survey conducted among 7 auto dealers from across India suggests that monthly sales will only be marginally better than in December. Yash Upadhyay standing by with the details. Yash.
Afternoon, Nia. So, well, automakers are expected to start the new year on a slower note, as a very high base of last year for most of these automakers, along with muted retail demand, are likely to take a toll on the auto sales. However, on a month-on-month basis, the situation does look a lot better, and this is primarily down to the 2 reasons. One being the heavy discounting that they had in the previous month, which they have followed on into January of this year, as well as the pickup in sales post the festive season. So we had Makar Sankrant, Pongal, as well as Lori coming in. So the first 15-20 days, they seem to suggest that sales have picked up on a month-on-month basis. Let's take a look individually at how these companies are fared, and we'll start with Maruti Suzuki. They had an exceptionally strong January of last year. They did sales in excess of 150,000 units, on the back of which we are expecting a drawdown of about 7.5% on a year-on-year basis. Heavy discounting, like I mentioned, on their entry-level models amounting to up to 75,000 rupees for the Alto Ciaz, as well as their flagship models like the Baleno and Brezza as well. Having said that, these offers don't apply to their new launches, which is the Ertiga as well as the Wagoner. Ertiga has a waiting period of anywhere between 6 to 8 weeks, as well as the Wagoner, which is received very well, already has crossed bookings in excess of 12,000 units. Moving on to Tata Motors, they too had an exceptionally strong January of 2018. They did sales of close to 65,000 units, aided by strong growth in both their passenger vehicle as well as the commercial vehicle space. This time around, not so much. So 10.5% degrowth in volumes is what we are expecting. The Tata Nexon, that has a big discount of 35,000 rupees, along with several other models like the Tigor as well as Hexa. The newly launched Harrier, which they launched a week or so back, that too is being received very well, is what the dealers are telling us. Moving on to Mahindra and Mahindra, there we are expecting a drop down of close to 10% on a year-on-year basis. Again, heavy discounting for the likes of Bolero, Scorpio, anywhere close to 50 to 85,000 rupees. The newly launched Marazzo, that is also being received very well, has a waiting period of anywhere between 4 to 6 weeks. But that's as far as the passenger vehicles are concerned. Let's take a look at the two-wheelers, and we'll start with Hero MotoCorp. Nothing amazing when it comes to the deals, about 3,000 rupees cashback. But again, they had a fantastic last January, and on the back of that very high base, we are expecting a 7% drop in volumes. Also, let's take a look at what we have in in terms of Bajaj Auto, well, it wasn't a great month for Bajaj Auto, and like I said, for most automakers it was. So Bajaj being that one exception, along with TVS. There we could see a small uptick, about 3.5% growth in volumes. In terms of the key schemes that they have is the 555 scheme, which is 5-year free servicing, free warranty, as well as zero debt insurance. That should work well, along with the heavy cash discounting that they have on their top selling model, which is the Dominar, amounting up to 10,000 rupees. Moving on to TVS Motors, again a slight improvement on a year-on-year basis, about a 3% growth in volumes there. What's doing well for them is the likes of their scooters and bikes. They have heavy discounting there as well, amounting to about 7,500 rupees, as well as low interest payment and low down payment schemes that most of these auto dealers are offering. And lastly, let's take a look at Royal Enfield. They did sales of close to 78,000 units in January last year. And taking a look at how they have done over the last 4 or 5 months, it's highly unlikely that they would be able to breach that number. So on account of that, a 7.5% drop in volumes is what, again, the dealers are telling us. No special offers being given there.
Yes, thank you for that. Those are the details from a Bloomberg Quint survey of dealers. The Supreme Court has maintained status quo on the Fortis-IHH deal. Remember, the Apex Court had put Fortis Healthcare's sale to IHH on hold in December. The status quo will continue until the next hearing on the 6th of February. Arpan Chaturvedi is standing by to tell us more on where this case is headed. Arpan.
That's right, Harsha. So this order of status quo was passed last month in December 2018, and that came on a plea by Daiichi, which had said that that despite the top court's order that no fresh encumbrances of pledged shares would be created by Singh brothers, there were fresh encumbrances which were created. And while hearing that petition last month, the Supreme Court had passed an order of status quo on as far as the Fortis-IHH deal is concerned. Today in court, what happened was that there was an application by Fortis seeking the vacation of this status quo order, and on that today the bench headed by Chief Justice has issued notice to Daiichi seeking their response as far as the vacation of the status quo order is concerned, and then the case was adjourned and it will now come up for hearing on February 6th.
Right, thanks so much for that. The Reserve Bank of India Governor Shaktikanta Das was part of a meeting with public sector bankers earlier today. The regulator conveyed its expectations and bankers their outlook. Listen in to what the governor had to say post the meeting.
The idea was to share with the public sector banks, the CEOs and the MDs, what are the regulators' expectations from the banking sector, and also to listen to them about their assessment of the current state of the banking sector in general and the public sector banks in particular, and what is their take on the future outlook of the public sector bank.
That's the RBI governor. The government may announce plans to borrow 6.4 lakh crore for the next financial year during the budget on Friday. That's according to a Bloomberg News survey of 15 strategists, and it's likely to put significant pressure on the country's debt market. Karthik Goyal is here from Bloomberg News to tell us a little more on the details. Karthik.
Yeah, Harsha, thank you very much. The bond traders are very, very nervous ahead of this week's budget. One thing that is on everyone's mind is overshoot in the budget deficit for this year and the next year, and how the government is going to finance that budget deficit. So markets are telling us a substantial part of that is going through market borrowings, and which is likely to be 6.4 trillion rupees. And there are all kinds of stories, on the anvil, how the government is going to finance the farm package ahead of the elections. So in case it's in 6.4 trillion rupees or in that vicinity, markets will still be fine. If it is substantially higher than that, then it's going to have a massive negative impact on the government bonds and the yields.
All right, Karthik, thanks so much for that. Later in the week, of course, we will get the big budget. Let's move on to global news. US and China head into a decisive round of talks this week in an attempt to put an end to their trade war. The officials have until the 1st of March to work out a deal. Bloomberg's Tom McKenzie reports.
These are expected to be, as you say, decisive talks in Washington between China's Vice Premier Liu He and Robert Lighthizer, the US trade representative. In terms of what we should expect, we just detail what has been proposed so far. Of course, the Chinese have made some movements on pledges to buy additional goods from the US, something that Wilbur Ross has described as the easy part of the negotiations. The Chinese have also put some measures out there to reinforce their intellectual property regime, and there's potentially a law passing that will effectively block or ban forced tech transfer. But there's been very little movement on the industrial policy, and certainly the Trump administration officials want to see more on intellectual property and forced tech transfer if they want to get any real movement. That was the signals, the noise that we heard from those administration officials last week. They also want to have in place a template to verify and enhance or enforce these trade negotiations or any deal that comes out of this. So, crucial set of talks happening January the 30th and 31st. Whatever happens is expected to go to the presidents, of course, and there's a question mark over whether President Trump is listening to his China hawks or the markets.
Tom McKenzie there. Facebook and Instagram messengers may soon be integrated with WhatsApp to create a single messaging app. Take a look at what Mark Zuckerberg has planned. Out of time on the show. Thank you so much for joining us.
Lots more coming up on Bloomberg.